Hi everyone, this is Mish Schneider, Chief Strategist of MarketGauge.com, coming to you for your weekly video. It is November 20th, short week in the US as we get ready for Thanksgiving on Thursday, Black Friday, half a day in the market on Friday. So we have a lot to cover. As you can see, the market is extremely happy. And so we're going to go through the S&P, Nvidia, big report tomorrow in earnings. Fed minutes coming out, not really looking at much there. They did have an auction today that went well, that gave a little bit of a dip to the yields. We're also going to look at gold, oil, natural gas, follow up on soybeans. So let's start here by looking at, this is an S&P chart. This is the futures chart right now. And when we spoke last week, we said that once this got over 4,500, let's blow that up a little bit here, that most likely we would see a move up, and of course that is exactly what happened. Here's 4,500. And when I spoke to you a week ago, it was trading down and after that big gap. So, you know, when you have these kind of big gaps, if they don't get filled, that's always going to be a bullish event. Same thing, of course, when we have big gaps down. So now what can we say? Well, obviously, we're getting a little bit into the nosebleed territory, but when we look at our real motion indicator here, which is our momentum indicator, we have still somewhat of a bearish divergence. This is important to note, even though it doesn't necessarily mean bearish, but the 200-day moving average is above the 50. That puts the momentum in accumulation, and it's over the Bollinger Band. But you can see here on the price, the 50 is over the 200, putting this in a bullish phase. So you know that you can never get too complacent. And of course, we do have a situation now where people are anticipating a Fed pause, but we did hike 21 times in a row. So it is possible that the impact of that hasn't even been fully felt by the market, but we're in the season to be cheerful. Of course, that's one reason. Black Friday, if that goes well, will give another boost. And the second reason, of course, is as we get into the Santa rally. And the third reason is that 2024 election years also tend to be bullish. So regardless of what's going on right now, everybody's having fun. So if we take a look here at this 45.33 level, look how pivotable that is. The high right here is 45.32. Let's call it 45.33 because the body of this candle right here is right at that same level. So we've cleared that right now. The current price is trading at 45.44. We're $10 higher. So let's call 45.32 to 33 our pivotal point. As in, we open up above, still have a friendly bias. We open up below, then I would start to think maybe we're going to be correcting a little bit. Whether or not we get below this gap, that remains to be seen. And of course, we're now, Nvidia, which we'll talk about in a moment, has about a 7% implied volatility, which isn't even all that big, but at new all-time highs, one wonders where can it go from here, and of course, what that will do for the overall market. We still have a gap here. If you look at the low here, is 4,567. With today's high 4,546. So that means we still have about $20 to go in order to be able to fill that gap, which of course would also be bullish. If the gap doesn't get filled, that along with that 4,533 level, if that starts to dip, then it's possible, not necessarily that we're going into a bear market or anything, but we could say that we've kind of reached here somewhat of a new trading range into major resistance, particularly as the small caps are still struggling to get back over that 1,800 level, and that's a factor as well. So there you go. Let's watch for that gap to be filled. If it can't be filled, let's watch that pivotal number. And then, of course, if we start to break down under that 45.33, looking at today's low is 4,510, we'll have to look back at around 4,500. I would say even more important than that would be somewhere around. So here is the Nvidia chart, and what I've added to this chart is a couple of things that you might find interesting. Number one is this is the July 6-month calendar range. Resets twice a year, January, July. Since this has reset in July, we had a brief stint above it and then of course broke below it, but we never really broke, except for again another brief stint below the 6-month calendar range low. So we could say that our range really has been a $100 range since July, 400 to 500. Now, right now it's making new all-time highs at 503. This was the last earnings report when it came in briefly, touched the high at the beginning of the day, and then proceeded to sell off. Never quite took out that high, and of course that's when we had that $100 drop. Now, it could be the opposite happens this time, of course, but right now we really don't know. So a couple of things to look out for. Number one is obviously you can see here that in terms of leadership, it is outperforming the SPY, and it has since the beginning of November. Still, though, can really do more in terms of the performance. As you just saw with the SPY, that momentum was starting to improve. Whereas here, if you look at our momentum, again, we have a bearish divergence. So interesting in that the 200 is above the 50, where here, obviously the 50 is above the 200. And the price or the momentum, the dots here, are sitting just on that 50-day moving average. So that's really the best I can tell you right here about Nvidia, that 7% implied volatility. That doesn't necessarily mean very much when you're talking about a stock that's trading over 500. So it's time for us to take a look at our old friend, the dollar versus the yen. And the dollar had gotten really strong against the yen until the last few days, where the dollar has been on its own falling. The dollar trading right now at around 103.50 relative to the euro. And there could be lots of reasons for that. It's also one of the reasons why we're seeing a rally in the market. The market's feeling a little bit of a relief on this weaker dollar. The question is, though, what's going to happen from here? And there's been news about Russia and China still talking about pricing oil and something else other than the dollar. There's other types of BRICS activity with the yuan getting some more traction. I mean, there's all kinds of things to be looking at where the dollar goes from, okay, great sign of relief, to, oh my God, it's free falling. And relative to the yen, of course, that 150 was that big level we had been watching and got through 150 and made a high of 151.90. Now, with this 50-day moving average coming in right here, as you can see, right at the top of the bar of the candle today, that gives us 149.46 as our pivotal level, even though we're trading a little bit lower than that right now, obviously coming here at 148. So let's say that could be the resistance, 149.46. We are getting into a little support here of the yen versus the dollar. So right now, we get down to around 147.90. We could say that this got a little bit oversold and we'll get that bounce back up to the 50. That's a possibility. If we're going to continue to free fall, then I would say we probably could get even more oversold, as we know, but I really doubt whether we're going to break down under 147 at this point. Now let's take a look at that same real motion indicator. So this is why the momentum is so important. In this case, the dollar's momentum was doing pretty good. We actually had a mean reversion back here, but it didn't really go anywhere. You see how it didn't break the 50, so we got the sideways consolidation, and then it actually started to get a little oversold here on the momentum down here when we had this little dip, and then of course it popped back up, took out the Bollinger Band, but immediately the next day had another mean reversion, and that's when it breaks out of the Bollinger Band and then breaks down. That was exactly pretty much at the top. So now if we go to where we're at right now, this is the lowest momentum that we have seen in a while. Now, when it had this dip here, the difference was that we could gauge a mean reversion to the upside on the Bollinger Band. Now it would take quite the rally to do that. So this is a sell rally type of momentum at this point. So like I said, unless we get back through this 50-day moving average at around that 149.46 level, this is a sell rally type of situation, and we'll see what happens going forward with the whole dollar in space. But certainly, as we see here, the yen finally bottoming out against it. So here's gold futures, again, December contract. We still haven't gotten quite through that 2,000 yet, but look how well we held this 50-day moving average. So incredibly technical. So there's your point, 1935 to 1940 bottom line support. We can now call this 200-day moving average as the pivotal number at 1980, which we're at right now. I feel like gold is just waiting for the right moment to take off. And what is the right moment? It could be a mistake by the Fed in terms of starting to relax and adding QE. Our money supply obviously is really low. With these interest rates, they could turn their attention to more QE. It could be inflation continues. Right now we had cocoa making new night high since 1978. Orange juice futures, soybeans, which we're going to talk about soon, is also doing well. Sugar now trading back at around 27.5 cents a pound. There's still a lot of reasons to think that gold could wind up reacting. But for right now, let's say 1960, 1980, that's your first $20 tranche to be watching, then 1980 to 2000. We get through 2000. Obviously, you can see there's $20 tranches here. You got 2020 right here. But I would say that you'll start to see a lot of the Western money that's not in the gold market start to get interested if this has a move over $2,000 an ounce along with some volume. And that's kind of what happens with crude oil now too. So it's a new commodity that hasn't quite figured it out yet. But we kind of knew, and I made a whole article about it if you check out my daily, that this was the low here, close to $72 a barrel. And so far, 2 days later, I'm looking pretty smart. But now we're going to have to get into the nitty-gritty resistance to see whether this really has what it takes to move higher. The fundamentals are extremely mixed, and we have an OPEC Plus meeting happening next week, the 26th. So at this point, right here, this is a good number to be looking at, just shy of 80. So let's call it $79.80 to $80. That's your resistance. We get through there, $79.80 to $80. Then I think, of course, we can see a nice move up. There will be some light resistance here, somewhere around these levels at 81.30 to 81.50. But really, until we get this negative sloping 50-day moving average overhead at 82.90, that's really where the bigger resistance is. On the flip side, I think it's pretty easy. After a nice 2-day pop, was it short covering, fresh buying? We don't know. Rig count was actually pretty low here today. If we break down now back under that 200, under 76.20, then most likely we'll take another test. I don't know about all the way down to the lows, but we can certainly see a test somewhere down here back to around 74.50. And then, of course, 72 would be the real area to look at. It's really hard to step back now and say whether or not this is a topping formation or all of the support that we developed and established here in April, May, and June is really all we did was dip into that support, and now we're going to have to do some work to get up to higher prices. We can say trading range at this point, $70 maybe to $90 a barrel. Natural gas is just so weak right now. I mean, could it turn? Of course, and that's why we're always watching it with curious eyes. Could it be another reversal bottom in play? We don't know. We thought that maybe last week, and what did we get? Not very much. This is where these moving averages come in handy. So maybe if we get back over 3, at least we can say today's low, which is at, where is it, 286.40, could be a good point to risk against. Back over 3, but we still would have a lot of work to do from 3. Obviously, we'd have to get back over 327. And then maybe we get more interesting. I wouldn't even take this 50-day moving average very seriously. I would say over 340. But what I do like here, and what I would be patient for, is if we can get back through this 200-day moving average. Last week it was at 360. Now it's a little bit lower at 357. For a couple of days, that to me would be the final proof that this dump is over. Finally, let's take a fresh look at soybeans. I showed you this chart last week, and I just love the fact that this thing sold off right to the 50-day moving average today, as a matter of fact, and gave a nice big pop. And this is with fundamentals all claiming that there's plenty of soybeans, but we know Argentina and Brazil are having a major drought. But more importantly, this to me overall looks again like one of those incredibly bullish charts. I guess you could say if you wanted to take a trend line, it's not a great trend line, but if you wanted to connect this top, and this top, there's an area that you'd have to get through. And we talked about that, right? 1400. But now you really want to keep your eye on today's low and that 50-day moving average at 1325. This has been a nice little pivotal point right here at 1350, 49 to 1350. Above, I'm definitely going to maintain a bullish bias. Below, maybe we get a second test or we fail those moving averages. And of course, if we can hold up here, the next level to get through after 1350 has to hold would be somewhere, really 1380. And then, of course, after 1380, we're looking at that 1400. And we get through 1400, then I have to say, I think that not only will soybeans be a good buy, and you could scalp it from the long side using that 1350 level as pivotal, but also it could mean bigger moves for a DBA, which is the ETF I love. And again, even sugar might be impacted by this as well, which right now needs to take out 28 cents. Okay, that's it for now. Hope you all have a great day. If I don't speak to you again, have a wonderful long weekend, and I'll be with you all again next week. Bye for now.